Here's an update on how we at TS Lombard look at geopolitical risk. I guess no need to explain why we want to highlight our geopolitical views right now. This has been a very geopolitical week, with the greatest danger of direct military clash between the United States and Russia since the Cold War. But we would flag another area in which we think the geopolitical driver is more powerful and more relevant for investors. That is the US-China trade war threat. Compared to war in Syria, to which markets seem indifferent, just as they were pretty indifferent to the height of the North Korea nuclear crisis last year, compared with that, the US-China trade war threat is, of course, a core driver of global market volatility and a core fundamental factor in the outlook for global economic growth. But what's geopolitical about that? On the surface, the US-China trade war seems to be about trade imbalances, tariffs, US jobs. But the Trump administration has introduced an unmistakable geopolitical vein into this whole dispute. The Section 301 report on Chinese industrial policy, technology transfer, and intellectual property policies is all about a global struggle for mastery in leading technologies. Let me give you a quick quote from Peter Navarro, Trump's assistant for trade policy. "The intellectual property China is trying to take is a key to continued US military dominance." So there you have it, the geopolitical angle. Two things which investors should draw from this. Number one, the problem won't go away, even if, as we expect, Trump declares victory based on some concessions from the Chinese authorities. But the underlying problem will remain. Second conclusion, there is a risk to that base case outlook, because the introduction of a geopolitical factor militates against a coherent, pragmatic negotiating framework in which the usual process of give and take can play out. Instead, you're comparing apples and oranges. Chinese offer concessions on market access, intellectual property protection, tariffs. The US says, change your industrial policy, don't try to promote the best technology. China, of course, will never accept that. There is no endogenous solution to this. It needs an external stimulus or shock, and one that might not be benign.